Good evening. This is the Elliott wave update for the S&P 500 and the Nasdaq 100 for Wednesday, August the 17th, 2022. The markets did pick it up a little bit to the downside today, but there was a very valid attempt to try to pull everything back up. So I'm going to get right into what we're dealing with right now, because the short-term picture has not changed. We're still looking for the 5 down, but I believe we're a lot closer. So starting here with the S&P, where we left off yesterday, was coming into just doing nothing and moving sideways when we were making the update. After reaching that high at 43.28 yesterday, 43.27, excuse me, yesterday, we did have, in my opinion, a rejection of that level. Not that that rejection was so heavy, but it was a rejection. And the market then just recovered a little bit, but then started back down. So on an Elliott basis, not putting any other attachment to it, but an Elliott basis, I'm looking for 5 waves down on the hourly chart. I can say 1, 2, 3, possibly 3, 4, 5 done, but even 3, and this is 4, and we're going to put in a 5. And that'll make it much more clear. Now, I'm not looking for a gigantic 5, so there is the possibility that 1, 2, 3, 4, 5 done. But I prefer to leave that in as a 1, 2, and this is the 3, and this is a 4, and we come back down. If it doesn't, and we continue to go up, well, we'll figure it out, because then it could very strongly just be an ABC. And that would complete 5. We do an ABC. It's like, wow, this thing is extending yet again. So that possibility still exists. And I know that we're all trying to, position up here, do what we think we need to do up here. Do I continue to hold long? Do I go short? Do I, cover my short, etc.? All kinds of trades are sitting out there. And each one of us needs to make our own decision. But if you're basing it on what the probabilities are of what I'm saying, in all fairness to that side of the conversation, they continue to carry a 50-50 probability. So, but here is what I would look for to give me confirmation that one or the other is in force. So to the upside, the market would need to hold about today's low, which is 42.55. And continue to turn and go up, break back above the 20, the 50s. So the 20 and the 50 EMA are bunched together there. Then we have the 50 SMA at 42.93, but it needs to get itself back above 4,300 as it did today, but not stop this time. So in other words, it's like, if this is only going to be a 3 and this is 1, this is 2, and then it's off to the races. That's how I would look at that. Now the downside, which I think will continue, because many things are unraveling in the S&P and the influence that the Nasdaq has on the S&P. So for those that have been following Bed Bath & Beyond, which is, I don't know if it's a part of the S&P, I know it is in the Nasdaq, but nonetheless, the Reddit crown has moved in, and over 200,000 shares of stock trade, just massive amounts of stock. But I guess somebody big, and it might have been Steve Cohen, decided that he's going to get out of a chunk of whatever he has. And so that kind of spooked the market. So Bed Bath & Beyond dropped, I think, 15%, maybe even more, 20-something percent. So it gets interesting to see things that people are trying to build that bullish picture on, and to actually what's happening. So anyway, so not that I don't know what Bed Bath & Beyond has influence on the S&P. The S&P itself has 500 stocks within it, we know. So if the market's going to continue to move lower, first thing it would do, it needs to break below 52.55, which was today's low, and then start to head for these 200 to 200. EMA is at 42.24, and the SMA is at 42.14. So basically you can say 42.25 to 42.15. And that zone should and possibly will provide some support. And if indeed this is a 4 and this is going to come down in a 5, it would be logical for it to find the support and complete the structure and move into the next small rally phase. Both will be tradable as far as day trading. And so that would be the downside. And how will we know? Because it really should continue. If it's going to break and move lower, it should continue with a little bit more force. Again, picking up this type of momentum, and you're going to do it again. So the next round of sellers come in. That will be followed by people that are either short cover or whatever they're going to do, but there will be an ABC rally. And that's pretty much what I can think this is. Unless this turns it around, goes up and breaks it and turns it into 5. So those are the looks here for the S&P. Moving average wise, you can see pulling it back out to the daily. I have changed the labeling. I flipped it around so that what we are looking at, to keep doing that because I keep taking them off and it keeps coming back. So I've done this about 3 times now. Maybe I need to save the chart. In any case, I have moved view number one over into view number 2 and vice versa. So view number 2 is now the one that is lined up. All the previous labeling and the forward labeling have been adjusted degree-wise to reflect this count. So if indeed primary wave A ended at 36.39, we're in an intermediate wave A of primary wave B. All right. So what are we looking for on that primary degree level? A, B, C. And don't rush it. First comes up the intermediate. That is intermediate A. Then you have, excuse me, then you have an intermediate B wave, and we've discussed it, but it still should fall off. If it's going to fall off, it should fall off quickly. Otherwise, upside again, additional resistance is going to be at 43.37. And then it kind of jumps very quickly up to 42.62 to 42.70. But 43.60 to 43.70 and 43.37. So we'll continue to probably find some resistance right at that 43.21, 22 level, which is where that 200 SMA, sits. Moving over to the Nasdaq, it basically did pretty much the same thing today, although Apple had a much firmer grip on the Nasdaq, of course, because it sits at the top of that food chain, as does it sit at the top of the food chain in the S&P in terms of weighting. But it was Apple against 500 stocks, 499, I should say, versus Apple against 99. So Apple did trade above 176 today. And I had thought the target was 175. Others thought the target was 174. It got up to 176. Looks like it's going to head to 180 for Friday. Now, that'll continue to have play here in the Nasdaq unless something just changes everybody's mind. 180 is out of the picture and they start moving it back down, shoving it through strike prices, which will drive the market crazy. It won't drive the market, it'll drive us that trade the future crazy because it really then forces adjustments, as I've been discussing. We'll discuss more of that after tomorrow's trade to see what it all looks like. Now, in what I've done, again, is change that labeling to reflect that we're in a primary B wave. And the other view, now view number 2, is that we're completing a minor wave 2. So both are still very valid. That minor wave 2 does not get negated until, seriously, it doesn't get negated until the market would break above 15,322. Now, an A wave can also get up that high, but I'm looking for the A wave to complete here, put in a B wave, and have the C wave get up here. And that would complete a primary A, B, C, and then we do a primary C wave. Boom. So we finish an intermediate degree ABC, primary B, then we do primary C, which will be 5 waves and it'll be down. That's what's sitting out there yet to come. We still need to get through this intermediate B wave and then an additional rally and a C wave, and then a much stronger decline. So what can we look for tomorrow? I'm hoping that we just improve how buyers and sellers are kind of moving into the market, because it's kind of hit and miss where suddenly somebody's got to do something big and they just come in and do it. And it's not part of the, let's say, the routine type schedule that you can kind of figure out trend and what they are looking to do. Sometimes the timing there can be pretty bad as well. So what can be going on? I wanted to pull it down out of that and down to the hourly chart so we can take a peek inside to actually see. Now, remember, on coming off, I continue to look for 5 waves down on the hourly chart. Now, I will be honest, if I had to, push comes to shove, I could do 1, 2, 3, 4, 5. That's where 3 would end. That's where 4 would end. All came in the same hour. And then we did a 5. And this is either a wave 2 or it's 1, 2, 3, 4, and I'll show you how, and then a 5 still in progress. Now, I will show you what I do often is I'll drop it to the line chart. Now, line chart is on a closing basis. So it takes out a lot of the noise, the extremes that we see. So you can see more cleanly on an hourly chart, 1, 2, 3, 4, 5. Now, that would be a little bit of a push for me. So I'm more satisfied with 1, 2, 3, and this is 4. No rules are broken. No rules are even close to be broken. The 20 continues to put a little bit of pressure and control on the hourly chart as it kind of comes up and it's still heading down. 50's heading down. These are getting ready to hook again. So if that's the case, 1, 2, 3, and a 4, then we're looking for the market to come down and at least got to test, if not break this level, because we were, how was our low today? 406, 13,406. It needs to obviously get below that. But I find that we have pretty strong support here at the 200s. We have the 200 EMA and the 200 SMA, both basically at 13,394. And I believe the other one is sitting down just below probably 90. So that can vacillate between 85 and 95 right now. And if it holds, it still could be putting in that 5th wave, and then we get another 3-wave rally. And again, if we can count the 5 down, then I would not be expecting the next 3-wave rally to go up and break that high. So that would be the difference. So, and we would use, of course, this high, which is a 13,741 and 3 1/4 or 3/4, something. Oh, 40 3/4. I upped it to 41. So 13,741. So it would not be expected to go up. Okay. So if this kind of swings and comes back down, stops here or stops a little bit lower, cleans up a 5, and then does a nice 3-wave rally up with the buyers coming in. Maybe Apple jumps into progress. I don't know. But if the market should then turn and go back up in 3, I would not expect it to break to new highs. I actually probably wouldn't really be looking for it to break above 618, 13,618 to put in a wave 2. So this would be well, actually it could be A, B, A, and then this is a B, and then we're going to do the next. But I'm more looking at this being wave 1, and then a wave 2, and then a wave 3 to finish or to put in the B wave or an intermediate B wave or the start of that minor third. So for sure, we're looking for 5 down. We get 3 up, and then I'm going to look for 5 more down. And that could complete the B wave, or it could be the first 3 waves of the minor 3 down. So we're going to have to follow this for a little bit. I hope I'm not making it too confusing. For tomorrow, I actually, again, I'm looking, let's look and see if we can't get down, get into here. We should continue to find support at 3,300, 13,300, of course, but down to 13,281. That would be our next level after that break. This is pretty empty because it was a very strong rally up, and so there's nothing that took place in there. It just went, held, and went. So we dropped very quickly into solid support levels. That's because, like I've said, to me, this is air. This was air. These are air. No sellers, you just got to get it. And then it stays up there. So without the other side pressure, it's just going to hang out. Put a little pressure, comes back, hangs out. Put a little pressure, comes back, hangs out. So that's where I'm going to leave all of this. The moving averages are still basically turning lower to me, rather than getting flat, providing that resistance or support. And so we're just going to take it day by day and see what happens. Our next update will be on Thursday, the 18th.